Today I'll be revealing my full £165,000 investment portfolio. This will be a portfolio update like no other, where I'm quite literally going to share everything. From all of my holdings in my stocks and shares ISA accounts, which I hold with Trading 212 and Vanguard UK, we'll dive into the individual holdings of my pension, the returns from my investment property, and a few other non-stock market related investments too. Now I've been investing since late October 2017, so about 6.5 years or so now as of recording, and despite all of the results that you'll see in today's video, I'm going to attribute most of those results to one very simple thing, and that's taking consistent action every single month by investing into my investment portfolio without fail. And the compound calculator that I love to look at simply shows if I keep doing the same thing for the next 6.5 years and beyond, I'll hopefully be in a very strong financial position in a decade or two from now. This is where my investment portfolio journey started back in late 2017. I opened the account, deposited £400 a month up until about early 2020, and as of right now, my current portfolio value sits at £14,240.31, where I'm currently up 118.32%, meaning I've more than doubled my principal investment, which sits at about £5,200. with returns of just over £9,000. Side note, I did take a big withdrawal from this account to the tune of £5,000, which you can see for some of you smart cookies working out the math on my investments whilst watching. But aside from that withdrawal, the portfolio has generally headed in an upward direction ever since, and that's because all of my investments are held in an S&P 500 ETF. And with the S&P 500 most recently hitting all-time highs once again, the portfolio is performing pretty well. Year-to-date returns are about £1,500, with £72.83 withdrawn from dividends, which I've received so far this year. And then the goal for this portfolio is to simply let it run. I may transfer it over to Trading 212, which is my active portfolio, which I'm currently investing in right now. But to be honest, the only thing stopping me is my own laziness in filling out the forms and actually getting the ISA transfer complete. So as of right now, I've got no intentions to add any more to this investment portfolio. And as I said, I'm currently building up my portfolio on Trading 212, which is in fact the cheaper and kind of better option in my opinion anyway. So here is my Trading 212 stocks and shares ISA account, which is an account where the government allow you to invest up to £20,000 per tax year completely free of tax. And my goal is to max out this account every single year for the maximum tax benefit. However, as of right now, obviously we're only just over a month into this tax year, but I've done about a 6% ISA utilization so far, with a deposit of £1,280 in total. I'm certainly a long way off from that 20 grand figure, but I'm off to an okay start. Now, in terms of the details of the portfolio, well, as you guys can see, it's valued at just shy of £48,000. Most of that is actually held in the portfolio with free funds of 146 quid. Now, in terms of the gains across the portfolio, well, my principal investment is £35,020, with returns as of right now of £12,803.71, the equivalent for a rate of return of 36.56%. Now, since the start of the year, if I kind of drop this back to the start of January or end of December, you can see the portfolio was valued at about £40,000, give or take. Obviously, there was a little bit of market movement in those couple of days in between. But as you can see, generally speaking, about £40,000 in the account, so the portfolio has grown about £7,000 give or take just this year alone, and that's from both my principal investments and me contributing to the portfolio every single month, along with the capital gains from the growth in stock prices this year too. Now, generally speaking, since I began this investment portfolio back in 2020, it's generally headed in an upward direction. You can see about a 12-month period where we did see some sideways and negative movement for the portfolio, thanks to the tech wreck of 2021-2022, which saw a lot of my holdings, which are obviously tech-based, very much plummet. However, since then, you can see we've been back on the upward trajectory for the best part of about 18 months. Now, perhaps one of the downfalls of this investment portfolio is the fact that it is so tech-based. However, in my opinion, there's no such case as the perfect portfolio, but be sure to let me know what your thoughts are down in the comment section below. As of right now, it kind of works for me and my own investment goals, and I don't anticipate materially changing this investment portfolio for the foreseeable future. Now, before we dive into my individual holdings, I wanted to run something by you guys and get your thoughts on it. Bit of background, I started YouTube for three main reasons. One, to provide financial education that we don't get. Two, to share my own personal investing journey to hopefully inspire others. And three, to build a community of like-minded people that I could chat to. Now, I feel like I'm doing an okay job of those three objectives, but in order to kind of take things to the next level, I feel like I kind of need to build a community outside of the walls of YouTube. I thought about calling this new thing something like the Shareholder Lab, where a community of like-minded investors come together in order to collectively build their financial futures. It could be a place where we can chat a little bit more easily. Perhaps I could do some workshops on specific topics that you guys are interested in, perhaps even weekly live Q&A calls, or even some deep dives into some individual stocks or specific topic areas, all with the underlying goal to help you build your six-figure investment portfolio too. Now, I've got loads of ideas as to how this could kind of work, but I've got a couple of favors to ask of you in order to get your thoughts too. One, if you want to be a part of it, then be sure to click on the link down in the description below to join the waitlist, and then I'll send you updates as and when they come around. Number two, at the end of next week, I'm going to send you all an email with perhaps some polls in order to get your thoughts on what you specifically would like to see in the community. So be sure to keep your eyes out for that. Number three, if you're not interested in any of that, but you want to stay connected on YouTube, then be sure to click on that subscribe button if you haven't done so already. So now let's discuss my individual holdings, starting off with some of the big winners. So firmly in the top spot in terms of returns, we've got Advanced Micro Devices, 42 shares valued at £5,489, where we're up on this position just over 100%.
Yeah, boy.
My average cost price for AMD stock, if I scroll down, is currently $83.96, which compares to the current market price of $166.11. And as you can see, in terms of the makeup of the gains, most of it, 99.3%, in fact, has come from gains in the stock price, and then we've got an FX gain of about 1.5% too. I've got AMD in this portfolio purely for capital growth across the growing segments of the industry that they operate in, with their core revenue segments very much focused around semiconductors, data centers, and AI. And whilst there were some positive outputs from the Q1 earnings reports, the stock still does trade at 238 times earnings, so for me it's not a position that I want to add to right now, but it is one that I will continue to hold as I'm still very much optimistic on AMD's long-term prospects. The next big winner within this investment portfolio is Meta Platforms, 19 shares in total, valued at £7,045, where we're up just shy of 82%. Average cost price for Meta Platforms is $268.93, and that compares to current market prices of $470.90. And you can see the breakdown of that gain, which 78% of which has come from growth in the stock price, and then just shy of 4% has come from a favorable FX rate. I do very much still like the long-term financial prospects of Meta Platforms. We're still seeing strong financials and an earnings per share figure which has substantially grown in recent years, which is great for underlying shareholder value. And with a forward price to earnings of 23.92, it's not exactly a million miles off being quite an attractive investment again. A couple of other bigger positions that are also performing fairly well for me are Amazon and Apple. Amazon, I've got 35 shares valued at £5,100, where we're up just over 30%. And Apple, on the other hand, is actually the biggest individual stock holding in this specific part of my portfolio, where I've got 59 shares valued at just shy of £9,000, where we're up 52.72%. The only position bigger than my Apple position, as you guys can see, is my Vanguard S&P 500 ETF, where I've got 198 units valued at £15,735, where we're up just over 19%. So 6 of my 8 holdings within this investment portfolio are performing pretty well, but there are a couple of others that haven't been all too great. Starting off with Palantir Technologies, 109 shares in total, valued at £1,826, and we are up about 1% on the position. Now, Palantir has had a good start to the year, more generally being up 31.2%, but it's such a volatile stock, I literally don't know what's going to happen week by week. 1 minute we were up at $26 per share, which admittedly was quite overpriced, and then back down to $20 per share within a matter of weeks, which is the equivalent to a 22% decline. If we saw a 22% decline in the broader stock market, everybody would be in panic mode.
Okay, it's happening. Everybody stay calm.
Now, I knew, of course, when I got into this position, it was going to be a volatile play, and I knew very much that it was a speculative play on the basis that it was completely unknown as to whether Palantir Technologies as a business was going to be successful in the future. And therefore, the fluctuations in the stock price that come as a result has resulted in the stock having a market beta of 2.75, meaning it's 2.7 times more volatile than the stock market on average. So just be aware of this volatility metric, especially if you're looking to build out your own investment portfolio. Nonetheless, I do still very much feel confident about the future of Palantir Technologies, perhaps even more so now than ever before. It's got a very strong foothold in the AI market, and their quarterly earnings reports very much reflect that in the underlying demand for the business seeing growth across all revenue segments. For me, it's very much a hold right now, but be sure to let me know what your thoughts are down in the comment section below. Then sadly, we've got Tesla, which has very much fallen from grace. 27 shares in total, valued at £3,717, where we're up about 0.5%. Tesla have had and are having a real shocker at the moment. Underlying optimism about the company perhaps isn't where it used to be, and whilst I'm still confident that the broader macro conditions are still favourable for Tesla and Tesla shareholders, in the short term it very much could continue to be a roller coaster. So they're all my holdings in Trading 212, but one thing that I always forget to mention is the dividends that I actually receive from these holdings that I have. It's not an awful lot, but it certainly helps out in the way of investment returns. So as you can see, I've only ever received actually total dividends of £384, and that actually comes from Apple, Meta, and the Vanguard S&P 500 ETF, which pretty much gives me the bulk of the dividends of about 40 quid, which I've received so far this year. In total, it adds up to about £66, making my total dividends from this portfolio and my Vanguard portfolio so far of about 140 quid. That's my Trading 212 portfolio, which takes us up to a figure which I'll pop somewhere up on screen, but I think it's about £62,000. Then we have my pension part, and there isn't really a huge amount to touch on here, but it is certainly something that I recommend for all of you guys to make sure that you're benefiting from some kind of employer and pension scheme. Not just for your employer's contributions, but for also the tax benefits that you get for making contributions to your pension before you pay your income tax. So where I work, I currently pay in 5% of my salary to my pension, and my employer matches that with a 12% contribution, meaning out of my monthly salary, I essentially get 17% of that monthly salary deposited or contributed to my pension. All employers, of course, are different benefits for each of them, but I'd certainly recommend that you check yours out if you haven't done so already. Right now, my pension is split into two funds. One is a global equity fund valued at £34,400, and a mixed investment fund, which includes some other asset classes like bonds, in order to broadly diversify my portfolio and somewhat reduce my risk. And that part of the portfolio is valued at £22,000, making a combined total value for my pension pot of £56,545. This takes my total portfolio up to around £118,000, but I'll put the exact number on screen. Next up, we have my investment property, which I bought in mid-2023 for £112,000. It's a one-bed flat, which I did some light cosmetic renovations to, and is currently being rented out on the market for £825 a month. Now, I put a 25% deposit down on this property, and the mortgage is currently interest only, giving me a total mortgage balance of £84,000. So if you do the math, I've got £28,000 in equity in the property. However, with UK house prices hitting record highs again this month, the property's valuation has actually risen to £121,000, taking my equity figure up to £37,000. So adding that to the pot too, we've got a portfolio value of about £155,000 in total. Now, they are the bulk of my investments, and I do have some other smaller investments in crypto and some employee shares that I also own too. My crypto is mainly made up of Bitcoin and Ethereum, which is valued at just over $6,000, which works out to be about £4,886. And I've also got company shares which are valued at £5,900, which here is a screenshot for because I can't get access to them on a personal device. I'll put the exact number for all of this combined up on screen, but it roughly works out to be about £165,000 in total portfolio value across all of these different asset classes. Now, if I can give you one takeaway from this whole video, it's not about the figures that I put up on screen, it's about the actions that I took behind the scenes in order to achieve the results I've been able to achieve. And whilst there are certainly a combination of factors at play here, one of the things that I said at the top of the video is to just simply be consistent. It's took me 6.5 years to build the portfolio up to this point, investing into the market every single month. But on top of that, I've also been able to gain from 6.5 years worth of market gains too, across the stock market and most recently the property market. So be sure to get started investing as early as you possibly can, because I'm very much a strong believer that if you make the right financial decisions today, then in 10 or 20 years time, over the long term, you'll suddenly wake up one day and you'll realize that you're in a fantastic financial position.
I'm really rich.
Now, for those of you that have been eagle-eyed, you may have noticed that about £30,000 of my portfolio is simply invested in an S&P 500 index fund. It's a strategy that's been massively successful for me, as you guys have seen. So if you do want to look to get started index fund investing, then be sure to click on this video next. Be sure to subscribe to the channel on your way out. With that being said, see you over in the next one.